is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Wednesday, June 29th. Well, after the wild swings of recent days, the market's calmed down considerably. Most major FX pairs are starting this morning in a range of plus or minus 0.25% from where they started yesterday. Last Friday, 0.25% was probably the bid-offer spread, at least. The key point is that risk aversion, this is what I see in the market, risk aversion is diminishing and risk on is coming back. So currencies like the Australian dollar and New Zealand dollar were fairly strong, while the safe haven yen and Swiss franc were weak. Even sterling recovered a bit. It may be significant, though, that the euro continued to decline. I wonder if people are starting to realize that the implications of Brexit are probably as significant for the Eurozone as they are for the UK. In this environment, traders who are willing to take on some risk may want to look at carry trades, buying the high-yielding currencies, perhaps in emerging markets, and selling the low-yielding ones. Australian dollar, the Kiwi, and in the EM world, the Mexican peso and South African rand are likely to be some of the beneficiaries of a move back into risk-on trades. I thought the Turkish lira, a very high-yielding currency, might be a buy too after Turkey improved its relations with both Russia and Israel, but with the bombing there overnight, probably that'll keep investors away for some time. As for today's data, during European time, the focus will be on the German CPI report. Higher oil prices are likely to push the inflation rate up a bit. As usual, the excitement will start as soon as Saxony announces its figure first thing in the morning. In the afternoon, there's a panel discussion with ECB President Draghi, Fed Chair Yellen, and Bank of England Governor Carney at the ECB Forum in Portugal. They may have something interesting to say about how policy will adjust to the stress of Brexit. So any comments, developments from London or Brussels will probably be more important than the data today. In fact, that'll probably be the case for some time. For an update on the U.S. indicators coming out today, please watch my North American opening market comment later in the day. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.